All right, and welcome to the HODL Review. We are here exclusively on the chain. You guys know it because you're here. This is Jeff, and you are on the HODL Review. I just said that, but it's exciting because we are going to dig into why are we seeing right now more discussion into digital currency, digital asset, CBDCs. Why is that relevant? Why are we seeing big companies talking about it? Why are we seeing big companies like PayPal and Square and that MicroStrategy and Alibaba and so many others that are actually diving into this digital asset space? Countries, Russia, Nigeria, we're seeing Latin America, in the US, all over the world, everybody's getting excited about this thing. What's going on? That's what we want to talk about right now.
And now, the HODL Review with Jeff on the chain.
Boom, and we're back. That's how we're going to do it, and that's what we're going to do because we want to dig in deep. We're going to try to put as much information as we possibly can and just pack that information into our brains. So while we're doing this, we're having a great conversation over here. Everybody's bouncing in and discussing and trying to figure out what in the world is going to happen as we get ready to go into 2021 because we looked at 2020. Was 2020 the year of adoption? Was it the year of growth? Did we see a big setback with everything that happened? Was there just this black swan event, unexpected, that's propelling and pushing the conversation of blockchain and digital assets, digital currency to the forefront of the discussion, the forefront of the conversation? I find it's amazing that it's all happening like right now, but it's happening at a faster and faster pace, right? So we're starting to see, like we said, Russia, Nigeria. I mean, both of them looking into testing out and adopting in the blockchain digital asset space. China, as we know, rolling out with a digital yuan, but is that really a digital asset or is it a digital currency? Is centralized, decentralized? What's the fundamentals there? And what are we seeing out of Alibaba? What is the anticipation coming out of Alibaba over in China? When it comes to the founder Jack Ma talking about digital currencies, are they going away? Is this just like some short-term thing that's getting everybody kind of crazy and jacked up here? This is what we want to dig into. But first and foremost, I want to go over and talk a little bit about banking because I think this is where it all starts, right? The banks, the financial institutions. A lot of people listening to this are into either Bitcoin or they're into XRP. They're following what's going on with Ripple. Maybe there's people into Ethereum. Maybe they're into VeChain. Maybe they're into whatever else. They're getting into DeFi. But the one thing that we're starting to see is that banking is changing. The banking that we were accustomed to is becoming a thing of the past. There's a lot of fat, a lot of personnel, a lot of HR complication when it comes to banking. I was talking to a good friend of mine the other day, and he's involved in the processing of settlements. And I was talking to him about it. It's interesting because here I am, I'm not a banker, and I'm talking banking lingo when it comes to cross-border payment. We're talking about the SWIFT and the Nostra Vostra accounts and all the different variabilities of having to achieve full settlement and all the issues that can happen because it's very error prone. And he's telling me about how many times there could be an error, and then you've got a whole call center that's trying to figure out exactly what's going on both sides, the sending side, the receiving side, what happened, and then they try to figure out how they can get full settlement. But there's people involved in this process. It's not just like something automatic and digital that's happening on the back end. But here we're starting to see with this blockchain technology and the fintech solutions. But even within fintech, there's still a legacy component that's baked into everything, right? It's not clean. It's not perfect. the fintech banking, or even in these CBDCs, something that Chip brought up the other day, and you probably saw in one of our roundtables. We're talking about Wall Street 2.0. Are these CBDCs basically, the same exact thing that we're in right now? Because if it's a sovereign digital currency by the government that's not in a decentralized framework, that's in a kind of centralized, ability to continue to keep printing and printing and printing, then all you do is you basically have a digital representation of your fiat and nothing more. So the problem, the legacy problems continue, but maybe within the CBDC realm, with that change in technology, it does speed up some of the components. It makes it a little bit more transparent, but you're still creating all these walled gardens. And so we have to really look deeper. We have to take a step further into it. I was going through and I find this article over on Forbes from, this just rolled out. Actually, let's see, what's today is the 25th, yesterday. So in the title of this article, JP Morgan veteran Daniel Masters explains how blockchain will end commercial banks. Now, we don't have to dig deep into this article to discuss this and figure it out. We already have a very good idea of what we're seeing on the ground, right? I mean, here's some guys. This guy's smart. He, is involved in commercial banking. But do we need to see that? We've discussed this, over and over and over and over again. What is actually happening when we see, Bitcoin, when we see the altcoins, when we see what's happening with Ripple, we see what's happening with XRP. The direction that things are moving in is all telling. But we also see that within the decentralized framework, within the exchanges, we're starting to see that a lot of this personnel, a lot of that fat isn't needed, that the process can be sped up. Like I was talking about my friend that's in the settlement side of things. So there's multiple people that are involved in that component. Now, imagine you don't need any of those people. Money moves, it's transparent, it goes through a blockchain. Right now, let's say you're using the ODL, the on-demand liquidity. It goes from bank A, goes into the exchange, it gets sorted out through XRP, gets delivered on the other side in the other currency, it's settled. 4 seconds, 5 seconds, the whole thing is completed. That's it. Maybe the banks want to make themselves a little relevant, so they slow the process down to maybe an hour, but it gets settled. It happens. Right now with ACH or bank wires, there's all these other variabilities that can take a long time. So from that perspective, the commercial banking is becoming dated. It's becoming very, very legacy. And so this is where we're starting to see the significance and the importance of what Ripple is doing. We're starting to see the significance and the importance of what Bitcoin has led to. Bitcoin comes to the scene in 2009, 2010. The philosophy of this utopian society of the Bitcoin maxi is that all banks go away. I don't see all banks going away, but I do see a transition point where banks don't have all the intricate components. They're no longer needed, but they're still involved in the movement of the process. They're still somewhat involved. And so you see a change, you see adoption to the future, but you see a shedding of all the issues, the legacy issues that have really, held them back. So, it's interesting here, and this is a direct statement. They're talking about coin shares within this. This is what's his name again? Daniel Masters. He's talking about, how the blockchain is changing the fundamentals of the commercial space. But I just thought there were some interesting components here that he brought out. I'm going back and I scrolled and just lost my spot here but I wanted to pull this out. And he's talking about something called well, let me go from the top. So on top, so how is CoinShares organized? He's talking about this entity. But on top, you have a holding company, CoinShares International Limited. It holds three things: our interest in CoinShares Holdings, the operating company, Comeno, our regulated custody business in partnership with Nomura and Ledger, and it holds our venture investing portfolio that is sourced from our own capital. Go down a level, and you're now at CoinShares Holding Limited. Now I'm quoting from this article a little bit, which has two main strands, starting with our trading business, CoinShares Holding, which has done 4.5 billion in turnover this year. The second business is CoinShares Jersey Limited, which is where we hold the same investment and fund service business license that we have when everything started. And then he finalizes this. Finally, we have a Stockholm domiciled company called XBT Provider, which is the issuer of our exchange traded notes that track Bitcoin, Ether, Litecoin, and XRP, dominated in the euro and krona. So here they are, they're talking about these digital assets. He's focused on these digital assets. They're moving, they're seeing that this is the future. This is the direction that companies and banks and governments are moving in. So, so that I think is, a critical element. Now, when you start going outside of banking, we go over to the Bahamian sand dollar. They just rolled out on the 20th, big announcement. They just rolled out sand dollars to everybody in the Bahamas. Now, everybody has access to the sand dollar. This is, beyond interesting, because we're starting to see a change. We're starting to see a trend. We're starting to see, conversations, or we're starting to see events move from conversation, from testing into reality. Cambridge, and let me pull up. Let me share my screen on this, because let's see. Here we go. So this is Total Finance. Now, why is this significant? Why is Total Finance significant? Here it's Canada's magazine for financial executives. It's not just some random, blockchain-based news source. This is the magazine for financial executives in Canada, recognized, top of mind. But here you have, Cambridge Global Payments. Now, we've already discussed this, but I think it's important to bring it up again, because, what is their business? It says right here, Cambridge Global Payments is partnered with Ripple to deliver cross-border payment solutions to business customers using RippleNet, Ripple's global payment network, right? This partnership will be of particular importance to small, medium-sized enterprise. Traditional global payment systems currently involve many intermediaries. It slows down the payments. It increases the margin for error. Everything we just talked about, right? The additional lag time can impact, this is great, can impact their ability to grow and scale their business. This is not just business in general, but the issues that you have in the legacy payment space can impact each individual transaction with delays and problems and their cost. It definitely does, and it can cause the cancellation of business because of potential issues in the legacy solution. Now, here you have these guys, they're talking about the benefit of this partnership. Why is it so close? This is, recognition, identification, again, that this new technology that's taking hold is making and having a tremendous impact on the space. Now, it's interesting because the timing, we talked a little bit about the timing in the beginning, the timing of everything. Now, someone once said that there's no such thing as a coincidence. Now, you have debt going out of control all over the world. You have trade negotiations. You have, a deep state type of, response, so to speak. Those are, terminology of our time. That you have an administration in the U.S. taking on, this whole other element that's out there, changing things, from a business perspective, making things and reshaping the vision of how agreements had once been shaped, mostly by lawyers and politicians. Now you see the reshaping based on a business perspective. So, but it's interesting. So you have all this stuff going on. Then you have this, the big, global illness that rolled out. Again, the timing of everything interesting, but also, from this point, we saw, a lot of things happening in the back end with the blockchain, the crypto, and then all of a sudden, in the past 6 months, we're starting to see it speed up at an exponential rate. So when you see businesses kind of going backwards, taking a back seat, now all of a sudden you see that the digital asset space, the blockchain space, has actually doubled in speed. And I think that's really interesting. So here you have, again out of here, new technologies like RippleNet that can reduce lag time are key to tapping the growing cross-border B2B payment market. Right now, here you have a recent study from Juniper Research indicated the total value of B2B cross-border payments will jump to $35 trillion in 2022. So you're talking in 2 years. Right now, they're stating it's at a low at 27 trillion right now. Right now, 27 trillion. So you're seeing a growth here of 30%. This is moving. When you move from the legacy platform, you're going to see a major impact on what's happening. Now, that's significant. To see that kind of growth, to see that kind of development is really, it's awe-inspiring. Because again, go back 6 months before this happened, and yes, the space was developing. Was there really a clear identification, though? We saw before all this happened, they dragged Facebook with Libra in front of Congress and the Senate in the U.S. There's more discussion about regulatory clarity, but it seems now that that conversation has increased. It's amped up, but not just in the U.S., all over the world. So one of the concerns that have come out of all of this is the fact that China has rolled out their digital yuan before everybody else. So the question is that significant? Does it matter that China's ahead? Is China that much further ahead than everybody else? The head of, I think it was Powell, Jerome Powell just recently came out and said that it's not critical, or was it Mnuchin? I think it was Powell, talking about the Fed and a digital dollar. He said it's not important that we're first. It's important that we get it right. And that statement, I think, is really spot on, because you have all these other countries that are rolling it out. Is there a race to be the first one to have a digital currency? In the short-term perspective, for like right now, if we look and we say who's going to win right now, maybe that's important. But think 10 years from now, 15, 20 years, 25 years, 50 years from now, is it really going to be that critical to say at that point who was first? Is it really that critical? Because it doesn't matter if you roll it out first. We see the sand dollar, the Bahamian sand dollar. They're first to market. Hey, that's awesome. Does that mean that the whole world is running around now trying to adopt the Bahamian sand dollar? Same thing with the digital yuan. If the digital yuan rolls out a centralized central bank digital currency, is the world going to run out there and try to adopt it right away? The answer is probably no. Just like Venezuela rolled out with the petro, and they tried to get some of their trade partners to get in on it, and they even tried to push India. They said, look, if you use our petro, we're going to give you cheaper oil. And India said, forget about it. We don't want to do it. And so they paid a higher price, or maybe not, I don't know, but nobody wanted to adopt it. Same thing with the digital yuan. It's interesting even from a retail perspective, it looks like it kind of fell flat on its face. Well, all the people that used it, people are like, hey, it's okay, but it's not super exciting. But maybe, again, from a trade perspective, these CBDCs might not make it to retail showtime right away. It might go more institution driven. Now, again, these CBDCs are going to be more centralized. They're going to be more silos. But you still need you need the rails. You need the intermediary, right? You need interoperability. And that interoperability doesn't necessarily, it's not baked in to the digital, to the sand dollar. Even though the sand dollar is a stable coin based on the US dollar, it's pegged to the US dollar, it doesn't mean that it's interoperable to all blockchain. And that's an important perspective. So now, as we talk about this and we think about this, I find it interesting, because here, in his words directly, now here comes from China's former IT minister. He says, blockchain is still far from maturity. Now, that's interesting. I mean, we're in this growth adoption phase. Yes, it could be a year, 2, 3, 4, 5 years down the road, 10 years down the road. Things are getting more exciting, right? We looked from the other day on our live stream. We talked about the CEO of Bitso. And saw what's going on over there. We talked a little bit about also with Ripple, getting into and developing in this market space. And we're starting to see growth. We're starting to see potential, but it doesn't all have to happen immediately, right? And is it as mature as we all think? It really isn't. It's just getting there, right? And countries are looking at it, but you see a lot of countries that are still testing it. Well, if we go back to even looking at Cambridge, Cambridge spent 2 years. The article that we just looked at, they spent 2 years testing RippleNet before they used it in full, in full pro version or whatever it's called. 2 years. And we're starting to see more countries doing that. Now, the Bahamian sand dollar had been tested already, I think, for a year or 2 years. So there's the banks and governments move at a very, very slow, monotonous pace, right? So now here, I think it was interesting because, again, this is coming from the former IT minister. This is where are we? Cointelegraph. So he said he doesn't seem to think China is that far ahead of the U.S. when it comes to blockchain development, at least for now. Now, is it just blockchain development, or are we talking about digital asset? Now here is Wu Zhangzi, China's former vice minister of science and tech, and a well-known digital economics expert, believes that blockchain tech is still quite young. And there's a lot that firmly believe that. Now, if it's young, just because China's ahead in testing, again, in the long game, how long is fiat currency been around? It's been around a long time. So do we really think back and say, were the Egyptians the first ones to mint money? Was it the Romans that were the first ones to mint money? Was it the Greeks? I don't think that's relevant. I mean, we're talking about a couple thousand years ago. Now, even in the grander scheme of things, 100 years ago, the U.S. dollar wasn't the primary reserve currency. Not that far off, but you get into World War I, and then you get into World War II, and then you see the adoption of the Bretton Woods and all of this, and you start seeing the U.S. dollar becoming more relevant as a more stable and accepted currency around the world. Changes, right? So it becomes accepted, and so it didn't just happen overnight, and you're not going to come off it overnight. But at the same time, it takes time. It's like long periods of time. Same thing here. So I thought this was really interesting to focus on, that yes, China might be doing some things that might be a little further ahead because of, was it regulatory? I mean, they don't really have clear regulatory perspective either when it comes to coins other than the digital yuan. It looks like they're trying to clear certain regulatory hurdles in China, but they're going to crush the others. They're going to crush things like Tether. And there's articles and articles and articles coming out in China with those types of statements. So here, I like this. With the innovative development of blockchain tech and industry, its application is accelerating, and the scale of the industry continues to increase. The field is expected to become a new economic growth point in the future. But that future could be quick. It could be 5 years from now. It could be 3 years from now. It could be, but I think that 5 year period to see this migration and this movement is reality. In 5 years from now, I think we can start seeing this adoption. If you look at that 2 year window of testing, a lot of countries, even with their CBDCs, are in that test point right now. So you forecast 2 years out. That puts us into 2022, 2023. But overall, you go back to, some of the conversation that we had recently with RippleNet. And they talk about, where is Ripple as a company, RippleNet? What's their philosophy? Not their philosophy, but where are their strategies? Where are they right now? Where were they over the past 2 years, 19, 20, where it was more of an adoption phase, right? So you had to get the identification, the recognition that blockchain and digital asset is actually something. There's that hurdle overcome. And then you move from that recognition to the actual adoption phase, where you see companies and ideas of adopting and proving the case through adoption. Now they're moving into a growth phase. So digital asset as a whole is going into this growth phase. And as you go into growth phase, you're going to test, and there's going to be growing pains, but they're going to test all the different elements of the growth phase. DeFi, decentralized finance, is like a perfect example within the growth space. So you see, even the DeFi is like pushing the limits, because as you get into digital economy, you need a decentralized mechanism to replace a lot of the legacy components that drive the legacy system. The legacy components meaning people. People constantly having to do the checks and balance, the audits, the error fixing. But now in a decentralized environment, you can get rid of a lot of that. You still need some oversight, but overall, if the DeFi component, the decentralized component, is working with a little bit of audit, it should work relatively seamlessly. And not say it's not going to be 100% infallible, but you still need a checks and balance. You just don't need the human error element. So you might have the digital error element, but you're not going to have the human error element, which is a lot more error prone potentially than if you get into a decentralized mechanism. So, so that's interesting, right? Now we go even a step further. So before we get into what's going on in Nigeria and Russia, and I love looking at Africa, I love looking at India, because I look at the potential, untapped potential of what can happen over in those areas. I mean, it's just, to me, it's just waiting, right? So you have different elements, and we're going to get into that, but I want to talk about Jack Ma and Alibaba and what he thinks about digital currency. But then we're going to talk a little bit more about these developing countries. How have the developing countries been suppressed or oppressed by the handout philosophies of these world bodies like the IMF and the United Nations? How have they impacted them economically to their own detriment? And we'll talk about that in a minute. So let's go over to this Jack Ma. And I think this Jack Ma is also kind of an important component that we need to talk about. So here you have Alibaba founder Jack Ma. Digital currencies are the future. Now, this guy gets it, right? He's like, he's like the eBay, PayPal of China. He gets it. Digital currencies. So he says here, he blasted global regulation and said that digital currency could create value. It could create immense value. He understands it. He knows it. He's benefited from the internal tension, conflict within China. That's the communist politics versus the capitalist economics. And he's benefited immensely from that. A lot of influence now from the government. But here you have, he's a billionaire at this point. He's benefited immensely from what he did. Billionaire Alibaba founder yesterday said that digital currencies could help create a new global financial system. 100%. 100%. We know that. And now this new global financial system that it could create isn't controlled centrally by different nations to manipulate the growth, the global growth. It's not possible. I mean, it's possible, but it's not relevant from what he's saying. Because again, it goes back to what Chip said on a previous video on a roundtable. It's Wall Street 2.0. If you have CBDCs that are centrally controlled by the banks and the government, there's no difference, no distinction. He attacked global banking regulations. Now, again, yeah, even in this article, it's not clear. I like just going in the brief, in the statements here. He understands, though, he's seen something that's happening, that's changing, that's going to change the way everybody interacts, everybody moves money, and he sees it. He sees the writing on the wall. Now, I'm sure that he's not referencing CBDCs and the digital yuan. I'm convinced of that. He might be referencing, he's talking about digital currencies. I don't think he's talking about the digital yuan specifically, based on where he's coming from a founder in the tech space as a game-changing solution within China, allowing the capitalist component of their economy to flourish. People like him were the leaders in moving the capitalist movement forward. Now, there's always been tension and conflict in that region over the communist politics and the capitalist form of the economy, but it's people like him that have made the impact. They've made the influence. Now, here's Binance Binance, CEO of Binance, wrote on Twitter that it was an amazing speech where Ma talked a lot about cryptocurrency in the future. Ethereum co-founder Vitalik was quick to ask what he meant by digital currencies, which is relevant. But if you think about it from a political perspective, you can dig in a little bit. You can kind of read through some of the lines and figure out what his reference point is. Vitalik is a little bit young, might be good from a technical programming perspective, a little bit young in terms of world experience when it comes to politics and relations and governments and that sort of thing. CZ understands China. I think CZ is a little bit closer to and understands how you can read between the lines to understand what Jack Ma is actually talking about. You guys can decide, but I think I think that was a really, really important speech for him to give and statements for him to make, because they are the future, and that's also kind of a point of reference for China and the rest of the world. But we go back to what the IT guy said, and the U.S. and other parts of the world aren't really that far behind China. China's still kind of in test mode. Everybody's kind of in test mode. Nobody's rolled it out 100%. We're just not there yet. So that's an important point to make. Now let's move over here. Let's look at Nigeria. Then we're going to look at Russia. Why are these significant? Let's talk about Russia first, and we'll end off with Nigeria. Russia, I think, is important because Russia has been very conflicted when it comes to digital asset and blockchain. They're conflicted, I think, with blockchain because of the transparency mechanism, as you see with a lot of these centralized, controlled, bordering on communist, government politics. And it's difficult for them to allow that kind of, just like in China, same thing, very difficult to have anything other than a digital yuan that could threaten their central control over their country, their sovereignty, their economic sovereignty, but way beyond that. It goes way beyond that. So, different conversation that you're having in a country like the US or the UK or Sweden or Switzerland, they're looking at it from a technical perspective. They're trying to find the path through the regulation. Then how can you invest? How can you improve the space? Some of these other more central countries are not thinking about it like that. They're thinking about how can this impact our control over the people? And that's the conversation. So it's a little bit different, but it becomes important that you look at what Russia is doing also, because again, it goes back to what the China's former IT minister said, that we're in the maturity phase. Nobody's further ahead yet. Everybody's still testing. And so Russia's still testing. The head of Central Bank of Russia, Elvira Nabiullina, announced at an online conference that the pilot test phase of the digital ruble could be launched before 2021 expires. So they're talking about a year out. Not even now. I mean, it's a year out. They're very conflicted within the digital asset space, though. But here we have a year out. So we do not set the task of ousting some kind of money. It will be, in fact, the third form of money along with cash and non-cash, which now exists. That of Russia's central bank also stressed that it's not the goal of the digital ruble to replace paper money. So it's a third component. In terms of data privacy, the digital ruble will have no feature of anonymity. highlights Nebelina. No feature, no privacy. There will be no anonymity in the sense that there is in cash, but it's assumed that confidentiality will be strengthened. Maximum confidentiality is the main task when introducing the digital ruble. So they're thinking from a political perspective. They don't want to allow that privacy component. It's in cash. They want to move people away from cash too. They just don't want to say that because it can impact the economy. They understand. They're really smart on how they're approaching this. Now let's move over to Nigeria. I'm so glad that they brought this up, the Coin Geek. I've talked about Africa a lot. I've talked about Nigeria a lot. There's a lot of development going on in Nigeria. And with the development in this blockchain space, people could be not just wealthy overnight, but it's life-changing for many, many, many people in Africa, different parts of Africa, Nigeria, in developing countries, giving them an opportunity to get into technology from where there might not have been opportunities like that before. So here you have Nigeria drafts blockchain and digital currency adoption roadmap. That to me is massive. It's massive. The Nigerian government has launched a roadmap. So they're projecting forward of what are needed phases in order to adopt blockchain and digital currencies. That is massive that they're thinking that way. Where's the US government thinking that way? Where are other governments thinking that way? Nigeria is looking at an opportunity to put themselves on the map as a major player in the new economy. So they need to position themselves perfectly. They don't want to be in this reliance mode, going back to what I had mentioned, in this reliance mode on UN handouts. There's initiatives from the United Nations that create handouts. If you look at Zimbabwe, a perfect example, it was a farming nation, mass exporter, has resources. When there was a transition of power at one point in Zimbabwe, and the powers that be that took over Zimbabwe, that was all done through international agreements, gave all the farming licensing to friends and family, people that didn't know anything about it. Within a short period of time, Zimbabwe went from a major exporter of agricultural product to a major reliance on UN handouts. Now, you see a lot of that within Africa because can they do for themselves? Yes. Can you give them an opportunity to do for themselves? Yes. If you keep giving handouts and you keep oppressing the communities in those regions. Now, there's a lot of political issues that go on throughout Africa that we can't ignore. Tribalism and conflict and things that you see in places like Afghanistan and elsewhere that are very, very difficult to overcome. A lot of problems within Africa are due to the artificial borders that had been drawn years and years ago. That some of the borders that were drawn put feuding tribes within a similar border. So it created hostility and animosity within government, not just parties, but conflicting. Obviously, there's a lot of issues, but much of it stems back to some of the areas don't have the resources. And so they become heavily, heavily reliant on. Then you have some areas that have heavy resources, like in Botswana or in Nigeria or in Zimbabwe, as I mentioned, where there's lots of resources, resource rich. You just got to, it's not always, possible when it's just pulling resources out of the ground doesn't necessarily enrich all the people. But when you have opportunities like blockchain, where people can get involved from a banking perspective in any business that you're in or in this business, you create an entire high-tech boom that's no longer focused in on Silicon Valley as the only place for it to be, but it can build up companies, ideas, everything can stem out of these areas. So when you see a government like Nigeria that's now focused on this roadmap, I think it's amazing, right? Titled National Blockchain Adoption Strategy. The roadmap breaks down how blockchain has changed the trust paradigm. Trust. There are major issues in Nigeria, and this trust paradigm is massive all over the world, obviously. Its adoption in Nigeria so far, how the government intends on applying it, and how it integrates with other emerging technologies. It's great. The framework was drafted by Nigeria's Federal Ministry of Communications and Digital Economy and made publicly available by local outlet Technology Times. It states that President Muhammad Buhari's government is keen on digitizing the Nigerian economy, and gradually reducing the overall reliance on oil and gas. Take a note in history from the UAE and Dubai. Decrease the reliance on oil and gas because you can't exist as a country with that being your only export. It doesn't benefit society as a whole. Saudi Arabia is a perfect example that in contrast to Dubai, you go to Dubai now, it's like Las Vegas, on steroids. Buildings, 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 buildings. It's amazing. The architecture there is stunning when you go to Dubai. And they got it. They understood that it has to be more than just gas. People from all over the world go there for sports, for F1, Formula One racing, for tennis, for business, for vacation. It's amazing. It's stunning. The first indoor ski slope. That was impressive. I couldn't believe it. Sitting in Cheesecake Factory in a mall, looking at people skiing. It's crazy. But this is the idea, right? They're understanding what's needed to push this nation to a completely different level. And that to me is what it's all about. That's what this technology is all about. It's not just about, hey, Bitcoin maxi, XRP maxi, Litecoin maxi, Ethereum maxi. It's more than that. This technology, as all of these big entities, whether it was the IT guy, head of IT in China, or Jack Ma, or Twitter guy, or Square guy, or MicroStrategy guy, or the JP Morgan guy, or on and on and on and on, they're getting it, right? Or you look at the e-krona, or you look at Estonia. You're starting to see this movement, and they're looking for the future of money. They're looking for the future technology. They're looking for the future of how you're moving money easier, faster, more efficiently. They're looking for the ways of doing business easier and better all over the world, so it's no longer just regional, even though we're already doing international business, but you want to open it up to more people. It shouldn't just be limited. So you go over to Africa now, it could be extremely difficult. It's dangerous, difficult, but it's amazing. Like Burkina Faso, it's a country nobody probably even, you wouldn't know it exists, but it's there. They had a lot of conflict at one point. Not so much now, but little countries in Africa, little countries over in Latin America, in Asia, where, you have small businesses over there that are allowed to build up and flourish. And maybe you can set up an entirely new, global paradigm of what small business really means. What exists over in the United States and in parts of Europe in terms of allowing the freedom of individuals to build their own, to develop their own, to take care of themselves, instead of being over reliant on government handout and oppressive thought process, where the government comes in and takes everything from you because the government believes that they know how to distribute your earnings better than you as an individual. Takes away the reward mechanism of why you start a small business to begin with. Small business opportunities within this space, within allowing people to become banked, build their small business, grow it to the next level, move beyond fiat currency, allow them to transact over the internet, which they can't do right now. People come in, I don't have my money. Okay, I take digital payment. And by the way, if you want to send me a Twitter or whatever, or WhatsApp, we can place orders. I'm going to have a little website. Online transactions. Before they're all paper currency, fiat. but their little business can now grow and service a region. Companies in Nigeria can grow up. Companies in parts of India can grow up and join the rest of the economy, the economic wealth that's being created in different parts of India. Same thing in the US, same thing in Latin America. That is what this change in our new economy is all about. That's what's exciting. We're not talking about short term, we're talking about long term objectives. I'm excited. I'm glad you guys are here with me. I'm glad that we just went through this. This is definitely a premiere, and you guys are on the premiere. I probably should have noticed and noted in the beginning. This is awesome. You guys are awesome. And tomorrow night, this is probably going to air on a Tuesday. On Wednesday nights, I'm planning on doing another live stream with Chip. I'm going to twist his arm and drag him into the studio to do another live stream. So check that out. You'll find it on there somewhere. Join us at 8 a.m. every Saturday for the HODL Review, streaming live 8 a.m. Eastern Standard Time, and every Sunday evening at 8 p.m. Eastern Standard Time for the Roundtable. You guys are awesome. I'll check you guys out on the next one. Let's get out of here. Let's do it.
Are you down with OTC? Please like, subscribe, and click the bell to be notified when the next video drops.